Hello and welcome to CMC Markets and this quick look at the week ahead beginning the 15th of May. And just for a change, we won't have to worry too much about European political risk. Having said that, despite the fact that Emmanuel Macron was confirmed as the next president of France, European markets took a little bit of a back seat last week, declining ever so slightly after posting some fairly decent gains over the previous 2 to 3 weeks. So against a backdrop of a slightly weaker European stock market and a little bit of uncertainty with respect to US stock markets currently near record highs and with volatility at multi-year lows. Going to have a look at some of the key drivers driving sentiment this week. And the UK is once again back in focus after last week's Bank of England rate meeting, which was a pretty neutral affair. If I'm honest, the MPC downgraded its growth forecast for the UK economy for 2017 from 2% to 1.9%. That wasn't really too much of a surprise. The Governor, Mark Carney, outlined his outlook that he expected household spending to remain fairly weak against a backdrop of rising prices and weaker wage growth. And we'll certainly get an early indication of that later this week with the release of the latest inflation data on Tuesday and the latest unemployment wages data on Wednesday and April retail sales data on Thursday. So that should give us a sort of a broad snapshot of the UK economy, particularly in terms of the unemployment rate, wages rate, and the relationship between that and inflation. Now, currently at the moment, CPI inflation is currently running at 2.3%. Core prices running at 1.8% for March, and average earnings are running at 2.3%. Now, the Bank of England estimates that by the end of this year, inflation will be at 2.8% and average earnings will be rising around about 2%. I'm a little bit skeptical about the fact that average earnings will fall by that much, simply because of the participation rate in the UK economy. The unemployment rate is currently at 4.7%. I think there's a possibility that wages might be more resilient than maybe people think firsthand, but we'll have to wait and see. Certainly the numbers that we're going to be seeing out later this week do have the capacity to certainly either push the pound back up towards that 130 level, which it's been hammering on the door of for quite some time now, or potentially pushing us back towards the 127.5 level, which has pretty much acted as a decent support level over the course of the last few weeks. So expectations for wages, unemployment and retail sales are expected to be, I would suggest, fairly positive. If we talk about March retail sales, they were very poor. We saw a massive decline of 1.8%. I would expect a decent bounce back in the April numbers, simply because of the timing of Easter and the fact that the British Retail Consortium retail sales numbers showed a really decent rise in April. So I don't expect to see particularly negative news out of the UK economy for this week. What other things that I'm looking at this week is the latest Chinese industrial production and retail sales numbers, which saw a big rise in the March numbers. We saw a big jump in industrial production. We saw a big jump in retail sales. Now, in the past few weeks, we've seen massive declines in commodity prices. So I think the big question that I'll be looking at with respect to the Chinese data is whether or not we see that data slide back in April, given the declines that we've seen in iron ore, 30%. Copper prices have fallen quite sharply, as have crude oil prices. Will that be reflected in the industrial production numbers that we get out of China? So that's also, I think, a very key data point. Will the April data confirm the PMIs that suggest that we've seen a significant slowdown in Chinese economic growth in April? What else am I looking at this week? US retail, that has been showing a little bit of divergence recently. We've had some fairly poor earnings updates from US retailers like Kohl's, Nordstrom and Macy's. This week we have Home Depot, Target and Walmart, and US retail sales have been particularly disappointing in February and March. Now, we could get a bounce back in April. As I record this video, I don't know the US retail sales numbers for April, but certainly we're looking for a strong bounce back there, and if we don't get that, I think that will reinforce concerns about the divergence between consumer confidence, the prospect of a US rate rise in June, which still looks a nailed-on possibility, and the actual hard data, the retail sales data, which continues to look a little bit on the weak side. So the markets that I'm looking at this week are obviously the pound against the dollar, particularly that 130 level, and on the downside 127.50. Also euro sterling I think is going to be particularly key in that context, because what we've seen over the course of the past few days is or the past couple of weeks, is a sharp rebound off the April lows, but every subsequent rally has been subsequently lower. So that does suggest to me that even though people are very effusive about the strength of the European economy, at the moment the exchange rate doesn't appear to be reflecting that. And certainly given what we've seen with respect to euro dollar in the aftermath of Emmanuel Macron's win, we've seen this massive key reversal day here in euro dollar, which would appear to suggest that there's a strong chance we could get a retest of the 200-day moving average, which currently comes in around about 108.20. So that's it for this week. Once again, thanks very much for listening. Just a quick reminder about the Monday webinar at 12:15. Otherwise, have a good week trading. This is Michael Hewson talking to you from CMC Markets.